Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today, as we have a lot of things to review for every single one of you. But first, I have to give you the reminder that John Deaton has given us a very powerful ace up our sleeve. The fact that the SEC and the judge in the library case both admitted that secondary market sales of library were not securities may very well play a pivotal role in retail investors, the relisting of XRP on exchanges, and XRP in the secondary market moving forward. Every single one of you need to be bullish on XRP from now into the future, and I would heavily recommend beginning to FOMO in an XRP while you still can. Now, that is not financial advice, and I am not a financial advisor, but you should still follow that anyway. Now, what I'm going to do is show you a couple things that are playing into the overall macro that are really going to end up playing a pivotal role on whether or not we continue to see crypto rise, or this is a fake rally and we're going to head into a much deeper bear market. Now, we need to start by taking a look at the Fed interest rate hikes as they raise the interest rates 1/4 of a point. The Fed states they need to expect ongoing increases. However, they're slowing down. They're going to get to the point where they pause on raising rates. And then, once they start lowering rates, once that Fed pivot comes, that's when we'll see our massive financial crash. The charts and the analysis we've done on this channel indicate that that's exactly what's going to happen. And while I don't know exactly when that's going to happen, I think it's closer than many people expect. First and foremost, I think this quote by Alex Becker is extremely important. The question is not whether a 0.25 to 0.5 interest rate hike is bullish or bearish. It's what the effect of 5 to 6% interest rate for 1 to 2 years will have on a market built on utter bullshit. Either the BS will get exposed or the BS overcomes with more BS. This is important, my friends, as every single one of you knows that fantasy economics is at play. Economics as a whole is extremely distorted, and every single thing on the planet is meant to make you lose money and manipulate you. Jim Cramer is at it again. The worst investor in history states that he says we're in a bull market and to buy the dip, meaning we're most likely going to correct at some point. I don't know when, but like clockwork, Jim Cramer is always wrong. At the exact same time, legendary investor Michael Burry, the man from The Big Short who shorted the housing market in 2008, deleted his Twitter account after he told everyone to sell. So what you mean to tell me is the man that is reliably wrong all the time is telling us to buy and that we're in a bull market, while at the exact same time the man that called out Wall Street bullshit in 2008 is telling retail to sell? That right there is a recipe for disaster. And all I'm telling you is be wary. Now guys, to add to all of that, every single one of you knows that currently we are at the end of the current financial system. The Federal Reserve can only do one of two things: either raise interest rates or lower rates. They've been raising rates to try and quell inflation, but they have been failing. Despite the fact that they're trying to make us believe that inflation is getting tamed and lowering, every single one of us feels it. And now we're getting into a point where the interest rates are going to cause a massive recession. And these interest rates are going to make it impossible to pay back the national debt, while US politicians are looking to raise the debt ceiling. You see, guys, this debt will never, ever get paid. However, I think this clip from CNBC is extremely important for overall context that lets every single one of you know exactly where we are as far as the end of this current system is concerned. Please take a listen.
Inflation has peaked. The biggest increase in last month and has remained is the renter equivalent number in the data, which was 0.8 positive. In reality, that was 0.34 negative. The lag in the housing data is completely distorting inflation. And since rents are falling, market rents are falling month to month, not year over year, month to month. They're going this way. You will see a negative number there, and it will look like energy. It'll come all the way down. So inflation will come down. And people who talk about keep raising rates, I hear these guys on your morning show, I want to strangle them. Volcker didn't have a $32 trillion deficit. So here's the actual interest number. The federal government spent the following amount of money the last 4 years on interest expense. In 2019, $375 billion, then $345, then $352, and last year, $475 billion. So here were the average interest rates those years. They were 0.5 in 2020, 0.1 in 2021. That's the average. These are LIBOR, SOFR rates. In 22, they were 1.9%. This year, they'll be 4.5%, 5% of 30 trillion.
We'll be up to $1 trillion.
$1 trillion plus
on interest.
And on interest, and that's so the budget that the White House put out has a $400 billion number that they didn't update it for today's interest rates. This is their November number out of the White House, which is where they put the 1.7 trillion, the fiscal spending. So what he faces, if he keeps going up, you have the Weimar Republic. He has to keep printing dollars to pay interest on the deficit. And you wind up printing and putting tremendous pressure now on all ends of the curve, right? So that will really slow the economy if the 10-year goes to 5 because this thing gets out of control. And who's going to buy our paper? And we've pissed off the Chinese. They're not going to be buying our paper. And most countries are pulling back to their borders now with deglobalization. The banks will support themselves. So he risks this if he keeps going, these academics in Washington. He risks the entire financial stability of the system. You have the IMF and the World Bank telling you to stop raising rates. Because what we do in our little holes in Washington with our Federal Reserve banks impacts the entire globe's economy. And it's not like it's strong in Europe.
But
so they can't afford higher rates.
But
They're worse off than we are.
Maybe this is what we need.
But it's coming your way.
Okay, so if rates go back down, then we'll say, hey, everything's fine.
So if he pulls this off, which he has a good shot of doing, actually, of having a soft landing, if he stops, he can have a mild recession is fine. I mean, it'll be fine. You don't destroy all these manufacturing jobs. We bring back, we onshore, we fix supply chains. He'll be good. I'd be bullish.
Now, ladies and gentlemen, that last part where they talk about being bullish, where they talk about soft landings, I absolutely disagree with. This system is about to collapse and there will be no such thing as a soft landing, in my opinion. However, the part about interest rates, it being too high right now, I do agree with. You see, ladies and gentlemen, we have to choose our poison. Raise interest rates and collapse assets, collapse the financial system, collapse stocks, destroy people's wealth, or inflate the currency into oblivion by lowering interest rates, printing more money, adding to government spending, and watch us hyperinflate the currency into oblivion. You see, guys, there was something that was mentioned in that clip about the Weimar Republic in Germany that I do want to touch on. And this is where the bull gives you an aggressively average history lesson. For those of you that don't know, the Weimar Republic in Germany suffered greatly because of the reparations they had to pay after World War I. The Treaty of Versailles made it so that Germany had to pay harsh reparations, lose territories, and make constant payments, causing Germany to hyperinflate their currency into oblivion in order to try and pay that off. During peak hyperinflation, $1 American was worth approximately 4.2 trillion German marks, and this, accompanied with the Great Depression, years later, is what sent Germany spiraling down and gave way to what we all know happened immediately after. Now, guys, the reason I bring this up is because currently there are countries around the world on the precipice of hitting hyperinflation and absolutely destroying their currency and its buying power. This will impoverish their nations. Look at Turkey and Argentina, for example. Their inflation is through the roof, and it could get to a point in the years to come with the US debt reaching all-time highs and no end in sight for them stopping government spending and stopping their government debt. This will eventually and inevitably cause one of the biggest financial crises on the planet, as the United States dollar is the reserve currency of the world. And as the United States keeps inflating its currency, people are going to suffer. You see, guys, here from 801XRP, Sam Lim at DBS Bank stated, the Saudi agreement to trade oil for US dollars are a major reason why the dollar is in its position today as the world reserve currency. However, recently, we know that Saudi Arabia agreed to start selling oil in yuan. This is going to have a significant impact on the US dollar and demand for dollars in the long run. This is going to lower the strength of the US dollar. And ultimately, this is going to raise the strength of countries like China, but also of select digital assets. We see here currently that the DXY, despite the fact that it is going a bit higher right now, throughout all of 2022 went absolutely parabolic, and this caused the crypto crash. Now the fact that it's gone down and corrected quite a bit is causing this crypto bull run, or at least this positive uptrend that we're experiencing. So now what I have to say is, if this trend continues and we continue going down for the DXY, I do expect crypto to strengthen, but at the expense of the United States. Now, please listen to this clip by the head of DBS Bank, as I think it's going to give you a better perspective as to how the United States is going to lose its power and how it all ties in to XRP potentially being the world's next reserve currency. Please take a listen.
So let's get into the banking world and some of the cross currents. I talked, as you saw, with Roberto Acevedo about the power of the dollar and being used as a weapon.
Yes.
I think it's great to get value-added assessment and analysis from somebody sitting in Singapore. Do you see the U.S. dollar fading away anytime soon, or the rise of the renminbi at a faster pace than most are expecting? Because we're trying to look at here the near term.
Okay, that's a very good question. Before I answer the question, give you sort of a slight preamble to it.
Sure.
When the Roman controlled the roads, they controlled the world. That was called the Roman Empire.
Yes.
When the British controlled the sea, they controlled the world. That was called the British Empire. So the Americans came along and thought if they control air and space, they will control the world. And so they were shocked when Russians sent Sputnik into space in 1957, and they were shocked when Yuri Gagarin went to space in 1961. And then John F. Kennedy retort was that let's put a man on the moon. And actually, because of that race, in 1969, the Apollo 11 landed on the moon. And that was really the start of the third industrial revolution, which was the digital age. Now, I digress a little bit from your question.
Makes sense. I follow you.
But the reason why why today is the American empire is really because of the US dollar. President Nixon, I don't know whether he realized it, when he depacked US dollar from gold, which gave America the ability to print money, it really made America the most powerful nation in the world. You look at QE1, you look at QE2, you look at QE infinity.
I know.
Not billions, not hundreds of billions, the trillions of dollars that's being printed. It's probably backed by the paper it's printed on. So, put simply, it's backed by confidence and confidence alone. Now, to touch on an earlier point about weaponization, the American weaponizing the U.S. dollar in this as we speak today actually undermine the only thing that's propping up the U.S. dollar. The only thing propping up the U.S. dollar is confidence and confidence alone. And by weaponizing the U.S. dollar, it might be good in the short term, but in the long term, there's tremendous repercussion for the country.
Yeah, so you're not a supporter of it, obviously.
I'm not a supporter of it. Yes.
Very interesting.
Yeah.
What do you think of this move by China asking to pay for its oil and gas to
China,
Saudi Arabia. What does that tell you about China?
Okay, China has been wanting to do that for a number of years, I think. And the Saudi has never agreed to it until this month, actually. So it's a tremendous, significant decision. And I'll tell you why I say that. Now, you look back in 1971, when the US dollar depacked US dollar from gold. Why would anybody want US dollar? Because right now, we don't know what it's backed by. But the fact that the US dollar is the dominant reserve currency of the world until today is because they have an agreement with the Saudis that oil, a most crucial commodity, is bought and sold in US dollar. By having it, that's why the term petrodollar came about.
Yes.
And because of that, the demand for dollar was always there. And because the demand was, the dollar was always there, even when they depack US dollar from gold, when we know it may not be backed by anything, dollar continued to be a strong reserve currency.
Right.
So this month, the decision by the Saudi government to let oil be sold in renminbi, I think it's a tremendous significant decision. Okay, I don't know whether the Saudis are aware, but by agreeing to the US to trade oil in US dollar, they were probably a major reason why today is the American empire as we know it today. The Saudis have really contributed to the position that US dollar is in today. And this recent decision to use renminbi, I think has significant implication in the long run.
Good. I wasn't planning to go in this direction with you, but I think it's very interesting. You're super smart. Why don't we get the wider implications of strained Saudi-US relations? Again, looking at it from that vantage point, I don't think we've seen this level of tensions in the last 4 years under President Trump and even with Joe Biden between Washington and Beijing right now. Does this get worse? Is this the next shock that people want to know about at the WGS in 2022?
Okay, this is a tough question, and this question is slightly above my pay grade. But let me try. And,
I don't see you shying away, though.
Let me try. When you have the two largest economy in the world, and if they were best of friends, it would be good for everybody. And, the world is really in harmony and we trade with one another. When you have two of the largest economy in the world, and the animosity among the two of them, it makes it very difficult for the smaller nations around. We are like, when two elephant fights, we get trampled on. Now, would the world move from globalization to regionalization? Would there be some form of bifurcation? Is globalization dead? I think it's under stress. I don't think it's dead. I think Roberto mentioned earlier, the way we are connected, the way technology binds us together, I just don't see how we can reverse back that we are so interconnected. Hopefully the relationship is right now under stress, but one day they will kiss and make up and we'll live happily ever after.
But this nearshoring and regional trade amongst ASEAN, do you think it'll accelerate? Is that the one lesson out of the pandemic as opposed to being protectionist? Do you find like a Goldilocks scenario where you do balance out your sourcing?
Okay, that is a good point too. I think it is a Goldilocks scenario. And but given what has happened, there is a certain form of national agenda whereby we can't be too dependent. Just like I think Roberto mentioned earlier, you have to say that sometimes it might cost a little bit more, but you want some production in your own country. Just that you're not 100% dependent on somebody else. What we have seen the last 2 years show that this is like maybe it's a tail risk, but it is a risk that happens. So I think it will accelerate ASEAN intra-ASEAN trade and probably within the Asia Pacific region with China. I mean, China is a big player, like it or not, in our backyard.
Now, guys, that was one of the most important clips. I could have played every single one of you. We understand now even more that the weaponization of the US dollar, the hyperinflation of the US dollar, and using the world's reserve currency against other countries will ultimately be the US's downfall. That is why the SWIFT system is collapsing. SWIFT is antiquated technology. However, SWIFT has been making moves in order to modernize its payment messaging system. But in the meantime, in the United States, Ripple got sued by the SEC. It's very powerful that powers that be and incumbents were trying to stop Ripple in its tracks from being able to go full steam ahead with RippleNet and XRP, because XRP is a neutral bridge asset. It is not controlled by any one nation. And despite the fact that Ripple is an American company, Ripple will democratize the payment system and take a lot of control and a lot of power away from the US empire. Like he stated in that video, when Nixon took the dollar off the gold standard, the United States absolutely propelled itself leaps and bounds ahead of the rest of the world. But now we have the Brics nations, Brazil, Russia, India, China, and South Africa, as well as numerous other applicants, including Argentina, Nicaragua, Senegal, Nigeria, Algeria, Egypt, the UAE, Saudi Arabia, Iran, Afghanistan, Kazakhstan, Thailand, Indonesia, and potentially others to come in the future. Turkey as well. All these nations are tired of the United States having this power. The US has not been a responsible actor with having the responsibility of having the dollar as the US reserve currency. Part of the reason this is accelerating even more now, as far as getting away from the US dollar dominance, is what happened with Russia. Russian oligarchs were having their assets confiscated overseas because of the current conflicts in Ukraine right now. And people are looking left and right at the United States like, what happens if the US one day just turns against us? It's a very interesting perspective to have, and one that you cannot take lightly. While Ripple is an American company, most of their progress has been happening internationally. And if you understand how XRP will take power away from the United States, despite the fact that Ripple is an American company, you'll understand why it's very likely Ripple got sued to try and stop XRP in its tracks. Despite all of this, in my personal opinion, we're almost at the end of the road. The SEC has failed at trying to uncover fraud and trying to deem XRP a security, in my opinion. And as this lawsuit is winding down, the rest of the world is on standby and ready for XRP adoption. The transfer of power from the West to the East is happening in real time. And to cap off this video for today, the only thing I ask all of you to do is do a little bit of a deep dive into AIIB, the Asian Infrastructure Investment Bank, as I think that institution is going to be instrumental in the adoption of the brand new financial system and the onbringing of the New World Order. Ladies and gentlemen, this is the Bearable Bull here. Thanks for tuning in. As always, I appreciate every single one of you. Now I'll be back tomorrow with another video.
Why do I hold XRP? Because Ripple's the chosen one to lead the new global digital payment system, and they use XRP. In 2013, the Federal Reserve began looking for faster payments options. 2 years later, an action plan was born and a federal payments task force was created. It included one company focused on crypto, Ripple. In 2014, the World Bank and Better Than Cash Alliance, which includes the Bill and Melinda Gates Foundation, Clinton Global Initiative, and the governments of 32 countries, put out a report called The Opportunities of Digitizing Payments. 1 year later, the Better Than Cash Alliance featured one crypto company on their website, Ripple. Today, Better Than Cash Alliance and all other UN initiatives are focused on a single agenda, the Sustainable Development Goals for 2030. You can see the SDGs logo on Bill Gates' lapel, world-leading companies, the Better Than Cash Alliance website, and on the UN's official exchange, Exchange. What crypto is Exchange officially utilizing for their carbon credit solution? XRP. The world will move to a new international standard for exchanging electronic messages between financial institutions by 2025 called ISO 20022. Who was the first ISO 20022 member focused on distributed ledger technology? Ripple. Who's partnered with over 300 financial institutions, including Bank of America, American Express, PNC, Santander, SBI, HSBC, Standard Chartered Bank, Bank of England, India, Singapore, Scotland, Australia, and Indonesia. The largest banks in Japan, Canada, Egypt, the Middle East, United Arab Emirates, Thailand, Morocco, Bhutan, South Korea, Brazil, and Latin America. Ripple, who is a former employee overseeing the Federal Reserve. Ripple, a former employee overseeing the world's largest asset manager, BlackRock's digital asset division. Ripple, leading Australia's CBDC effort. Ripple, who hired a former Treasury of the United States. Ripple, 2 former Federal Reserve attorneys to their board. Ripple, 2 former Clinton and Obama advisors, former Minister of Defense and Economics of Germany, former business director at Swift, former Swift board member, former CFO of PayPal, former head of the DTCC, former chief business officer at Uber, former VP of Amazon, and former SEC chair on their legal team. Ripple, who's a member of the Digital Pound Foundation, Digital Dollar Project, Digital Euro Association, Mojaloop, IMF's high-level advisory board on fintech, Hyperledger Blockchain Consortium, Open Payments Coalition, Faster Payments Council, Global Payments Steering Group, Cross-Border Working Group, International Association for Trusted Blockchain Applications, Crypto Climate Accord, University Blockchain Initiative, World Wide Web Consortium, and a featured partner of the World Economic Forum with 3 members of their team directly listed on the WF website. Ripple. Now, does Ripple and XRP sound like they're going to disappear, or do they sound like they're part of a much bigger plan? You decide.